Kia ora. Welcome to Shared Lunch, brought to you by Sharesies with BusinessDesk. My name's Patrick Smelly. I'm the editor of BusinessDesk. We have a great BusinessDesk special for listeners and viewers. You can find out about that at the end of this episode. But before we get started, here's some important information.
Investing involves risk. You might lose the money you start with. We recommend talking to a licensed financial advisor. We also recommend reading product disclosure documents before deciding to invest. Everything you're about to see and hear is current at the time of recording.
Today, we're joined by Manawa Energy Chief Executive David Prentice. Welcome, David.
Kia ora. Hi, Patrick.
Let's just kick off for viewers and listeners who aren't familiar with Manawa. Tell us a little bit about yourself. How did you end up leading this fine company, and what does Manawa do?
Oh, right. Okay. Well, first of all, thank you. Thanks for the opportunity for coming along and talking to you here today. As I said, my name's David Prentice. As you can probably tell from my accent, I'm not originally from these shores. I'm from Bonnie, Scotland, but I've been living in New Zealand, in Aotearoa, New Zealand now for about 25 years. I'm an engineer, a civil engineer. I did my study at Edinburgh University and was lucky enough to be selected to do a PhD in engineering as well. So whenever I go through passport control and I'm asked what occupation, I'm very proud to write down civil engineer. So it is kind of nice to be kind of towards the end of my career, not quite at the end of my career, but towards the end of my career, and privileged enough to be Chief Executive of Manawa Energy. And I guess to answer your second question there, Patrick, who's Manawa Energy? I'm sure some of our listeners and viewers here today may not necessarily know the name Manawa, but hopefully in a few months' time, you'll get to know that a little bit better. But you should probably know the name Trustpower. And Manawa Energy was effectively born out of Trustpower. So Trustpower was one of the largest generator and retailers in New Zealand. And over the last couple of years, we went through an exercise where we effectively sold off our mass market retail business and rebranded ourselves to now be Manawa. And Manawa is now effectively the largest independent generator of renewable electricity in New Zealand.
When you say independent, I mean, you're obviously not as large as Meridian.
Correct.
But they're government-owned, I guess.
Correct. Yeah. So when I say, good point, thank you. When I say independent, I'm talking about independent from the generator retailer model insofar as we don't have an integrated mass market retail base. So if I purely look at our generation, we're, to put it in simple terms, we're the fifth largest generator in New Zealand, the fifth largest, and we have a roughly actually about 5% of market share in New Zealand here as well.
So talk me through the rationale there and convince me that this is a good retail investor share option, because I mean, one of the things, and I've worked in your industry in the long distance past as well. Everything back in the day used to be you had generation assets and you had retail customers to balance them off, and the business was basically stable and would generate earnings no matter what the conditions in the wholesale and retail market were like. You're not quite going bare, but it's you're in a different position now.
That's right. I mean that's right. Look, it's a great question in terms of going back to really the strategic rationale for thinking about and ultimately selling off our mass market retail business. There's probably two or three strands to that. First of all, you're right in terms of if you look at many of the other mass market, if you look at some of the other generator retailers out there, there was seen to be a perceived advantage in having a mass market retail business as part of that business, which provided a natural path to market. So it was a vertically integrated retail business, and that's effectively what Trustpower had. And that worked well for us for a time being. But I think from two perspectives, when we first of all started to look at this as a strategic initiative, we first of all looked at our mass market retail business. And while Trustpower, I think, had been very successful in building what was ultimately a very successful mass market retail business, there is no doubt that the cost to serve and the complexity and the competition for capital was becoming increasingly intensive, especially
You mean the competition for capital inside the business between the
inside
generation
the
and the
business.
retail side?
You know,
Yeah.
so if you've got, I don't know, if you've got, let's say, $10 million worth of capital, you know, there's always a competition for that capital.
Yeah. Yeah.
And so we are starting to find that the retail business was starting to because of the added complexity of that business, was starting to have increased competition for capital. And then the flip side of that is we also were acutely aware of, or certainly there was a very strong imperative from our board that we, as Trustpower at that time and Manawa now, want to do our part to help decarbonise New Zealand. And one of the main ways, if we being Aotearoa New Zealand are going to meet our climate change targets, then one of the key enablers for that is having more renewable electricity generation. And therefore, by selling off the mass market retail business, by allowing us to focus primarily on the development of new technology, new development, new generation, but also to actually focus far more on our existing generation fleet, we felt that we would be in a far better position to actually enable New Zealand's path towards decarbonisation. So that was really the strategic rationale behind it, Patrick.
But doesn't I mean, that's obviously admirable, but from an earnings perspective, how do you cope with the fact that, for the moment anyway, to ask a slightly tougher question, you know, I think all of your assets are hydro assets.
Just over 99%. About just over 99% are hydro. Yep.
Yeah, with the exception of the asset at Bream Bay.
That's right.
So we're in a winter period at the moment where every hydro lake is full to the point where some of the time the electricity is only worth a cent a megawatt hour or something, and other times we're getting huge peaks and spikes, which maybe are good moments for you. But if you don't have that old style hedge or other types of generation to fill in, how do you deal with the volatility of the earnings, which must be a natural implication of only having one really main source of generation?
That's right. That's dead right. And that's why, as part of the sale of the mass market, the retail business to, I think everybody knows we sold it to Mercury. So as part of the sale of that mass market retail business, and that included, you know, round about 250,000 customers, more or less. We also negotiated the sale of effectively an eight-year power purchase arrangement, a PPA. So what that means is that we've effectively guaranteed in inverted commas the majority of revenue for a set period of time. Now that steps down over in predetermined amounts over the next 8 years, but it effectively is the equivalent. If you think about it this way, for the first 3 years, the load that we are effectively selling to Mercury is the equivalent of what we would have put through our mass market retail business had we retained it within Trustpower. That then steps down, which then allows us more opportunity to actually look for additional value for that output that starts to come free. So that's the kind of exciting opportunistic upside that we've got moving forward from here.
But you also, I think, have some 640 or so
Yep.
commercial and industrial customers. Do they also give you some element of that hedge?
Yeah, yes, they do. Yeah, no, thank you. Yes, they absolutely do. There was a deliberate decision to maintain our C&I, commercial and industrial customer base, primarily, as you say there, because it allows us that kind of additional path to market as well.
So just looking into the future and the way the business plan develops, the two biggest things that you've got on the agenda at the moment are wind and solar. Is that also a response to wanting a wider range of renewable options to spread your earnings risk?
Yeah.
Or is it more that it's easier to do those than to do hydro in New Zealand now?
Probably a bit of both, if I'm being honest. I mean, I'm sure we'll move on to kind of consenting and reconsenting opportunities and challenges a little bit later on. But certainly there is no doubt, if you look at the complexity around consenting for a new hydro scheme, that is significantly more complex than it is for, say, a solar or a wind farm. So there's no doubt from our perspective that our focus in terms of new development is very much on wind and solar. And look, we've been, I think, in a very short space of time, very successful in now having obtained just over 900 megawatts of executable new renewable development options across a wind and solar portfolio in both the North and South Island across New Zealand, to the extent that we're now just working through each of those opportunities in turn, hopefully taking them through consenting all the way through to financial investment decision. So you're right, the focus is very much on wind and solar at present, but there are many other technologies out there that I'm sure will come along that we'll keep an eye on.
So if you get that 900 megawatts away, what's the time frame for construction, and what are the capital needs through that period? Do you have it? Is the balance sheet able to carry all of that on the way through?
No, not at all. And I mean, the reality is, when I say we've got 900 megawatts of options, to kind of put that in perspective, if we were to get all of those options away, then that would be currently our output from our existing hydro is around about 500 megawatts. So that will be almost double what we've got in terms of our existing portfolio. So we don't expect to get that full 900 away, and it's quite normal for renewable developers to want to look to get as many. And we believe all of those options are absolutely in the upper quartile. So we believe they are very, very good options. But there's always going to be, as you work through that consenting process, as macroeconomics, global economics kind of play a part, there are always going to be ones that are more favourable than others. So our expectations is that 900 will drop down to a figure that is more executable. Then that gets on to your second question, whatever that number is, and we expect that to be many hundreds, maybe not up to 900. We will look at a number of different funding options because we won't be able to do all of them off our balance sheet. But I think there have been enough transactions globally and certainly in Australia in recent times to suggest that there are plenty of people looking to invest in renewable development.
So are you talking about power purchase arrangements where you have a visible customer who will effectively either give you a revenue stream that allows you to make the capital commitment, or going into JV with others? What are your options?
Actually, all of those options are on the table. So in the past, we being Trustpower would probably have been more limited in terms of how we looked at that. But certainly from our perspective right now, if you look at the requirement for new development, new renewable development in New Zealand as a whole, put Manawa to one side for a minute. So if you look at what's required in New Zealand over the next 10 to 20 years, I mean, I'm sure you know, Patrick, but we need somewhere between 50 and 70% more generation than what we've currently got just now. And if you look at the kind of developers that are out there, there's not one developer, there's not even two or three developers that can do that on their own. So we're all going to have to play a part in that. So my view is that the landscape over the next 20 years, 10 to 20 years, will be very different than it is just now. I think local authorities, regional authorities, I think iwi, I think local communities, they will all have a part to play. You've already seen, for instance, major industrial users. You've already seen organisations like airports come out and announce partnerships with generators and developers around new development. So we are very open to kind of all avenues for new development.
And we'll come back in a moment to also the fact that 51% shareholding from Infratil means that you can always presumably go back to the well there.
Yeah.
But just before we go there, one of the things which I hear most often from people who take a glancing interest in this sector is that everybody knows we need heaps more renewable generation, but that the industry is making insufficient effort to build it quickly enough, on the basis that obviously the less, the more tension there is in the market, the more you can charge for the juice. I mean, there's got to be some truth in that, but give me a view from your side of the table on that. I mean, obviously, you're never going to build a power station thinking it's definitely going to lose money. Let's do that.
Yeah.
On the other hand, how does the industry think about when is the right time to go? How does that tension play out amongst potential developers?
Well, first of all, and I would do this, Patrick. So apologies. I'm not sure I'm too aligned with your kind of rationale there earlier. I guess when I think about the landscape that we've got in front of us, we've got, on one hand, we've got the government, coming out. When was it? 3 or 4 years? Well, maybe even less than that. 2 or 3 years ago. With the Climate Change Act and putting in place targets all the way out to 2050. So there is no doubt that there is an end target or end targets in play. And there is also no doubt, because there have been enough publications out there now, that, as I said earlier, that new renewable generation has to play a major part in effectively electrifying the economy, whether that is electrifying the vehicle fleet or whether it's conversion of gas and coal boilers. But in terms of the incentives to get us there, I guess the challenge we've got at present is those shorter to medium-term incentives, which are primarily driven. I look at it really simply. You've got the stick and the carrot. So you've got the stick, which is new policies. So whether that's changes to the RMA and the proposed changes, to the RMA, whether it's to Manawa OTY, but effectively it's policies that will actually drive behavioural change and drive investment change. Or you've got the carrot, which I see as the ETS, which effectively should...
The emissions trading scheme.
Pardon?
Yep.
The emissions, sorry, my apologies. Yes, the emissions trading scheme, which should drive a competitive mindset and drive behavioural change, because it sends price signals for organisations to invest in the right area. And both of those, both the stick and the carrot at present, are, let's just say, murky. So it's a challenging environment to operate in at present, Patrick. But I think I'm an eternal optimist, because I'm Scottish, right? I have to be. Okay, so I'm an eternal optimist that at some stage demand is going to outstrip supply, and when it gets to that stage, the investment decision then becomes a lot more straightforward.
So are you saying really that if there's any reluctance to invest at the moment, it's because policy settings are too unclear?
Yes, yeah, that's certainly, we as an organisation, we've been very clear around that. We've advocated for change. We advocated for change through the proposed changes to the MBEA, which we believe don't provide enough clarity and enough certainty around renewable generation, and that's just one example. So yeah, a lack of clarity around policy direction.
Maybe you could talk a little bit about the earnings profile for the business. I look at the last 2 years, fairly consistent earnings is how I'd describe it, I guess. And you've paid good dividends. What should a shareholder expect in terms both of dividend policy? Will those dividends generally be imputed, do you think, into the future? What's the earnings outlook over a longer period than just the next little bit where we do have your earnings guidance already?
We've disclosed our forecast for this year, which is FY24, of an EBITDA profit, if you like, of somewhere between 120 and 140. And to put it in perspective, our results for last year was at the upper end of that range, but that also included, there's always overs and unders, and so if you look at it on a like for like comparative basis, this year we believe is going to be relatively similar-ish to last year. I mean, the reality is that we are most impacted because we're exposed to the forward, to the wholesale market. So it kind of comes down to P times Q, price times quantity. How much quantity of generation are we able to produce in any given year, and what price can we get that? Noting, as I said earlier, that some of that price is locked in already through the contract that we have with Mercury. So what I would say is that we're a very stable business. We've got a very stable earnings profile. As I said, it's impacted by forward price curves. Our dividend policy is 70 to 90% of free cash flow, and we expect to maintain that and seek to increase that, obviously, hopefully, as earnings increase.
And imputation, these didn't look like
there's a lot left at this stage. They're fully imputed. Yep.
So the growth story all presumably comes then from whatever you end up building.
That's right. Yes, primarily. So there's probably three legs, if you like, to the growth story. Well, one is we are seeking to, as I said, we've got some really, really super exciting prospects. Certainly, I believe that super exciting wind and solar projects that we're now working through a process, and we obviously hope to bring those to market so that they're actually generating. We hope to be generating new output somewhere between kind of 24 and 36 months. Okay, roughly. We've also got a very large program of work across our existing hydro asset base, somewhere north of $200 million that we're spending on our existing hydro space over the next 5 to 6 years. And that is, there's a number of reasons for doing that. Obviously, we've got a number of dams around the country, so we've got obligations as an owner of those to actually continue to maintain them in a safe manner. But we are also looking at some of our more strategic assets, and where we can, looking to enhance the output from those assets by putting in, in the space of replacing, in some cases, old machinery and old kit that can be 50 years old. By bringing in new, far more efficient kit, we can get more enhanced output. So we'll get growth somewhere around about a 5% growth in output, purely by the ongoing enhancement and maintenance program that we've got across our existing fleet. And of course, the last leg of that is any prudent organisation, as they should, need to be continually looking at their cost base across the organisation to make sure it's fit for purpose, to make sure that we're driving efficiency, etc., etc. So we'll continue to do that.
So of the various options that you've got, run us through the biggest, most alluring of the solar and wind. I think you've got one in the central North Island, somewhere very windswept looking. Somewhere in Blenheim, which hopefully remains sunny.
Well, I think most of the great growers down there would say it would remain sunny as well. So we've got currently three, and you'll appreciate, Patrick, I can only talk about those prospects that we've actually announced publicly. So when I've been talking about opportunities, there are a number of opportunities that we are working on that we're not quite able to announce yet. But certainly in one particular case, we hope to do that in the next few months. But of those prospects, of those opportunities that we've announced externally already, one is called Project Huriwaka, and that is in the central North Island. It's roughly 200 megawatts. It's a wind farm, and it's just south of Taihape. Now, so you're dead right. It's pretty windswept. For those that have driven up there and up on the desert road, it's pretty windswept up there. Now, this is a very well-established, long-established wind opportunity. It was actually previously consented by another one of our competitors, and they let that consent lapse, and we have since been in negotiations with the landowners and have taken on that option from them. So we're really in the process now. It's early stages because we need to go back through the consenting, but we are very, very excited about that because it's an excellent wind resource. It really is a superb wind resource. It is adjacent to transmission, which is always a key factor when you're looking at new generation, is the adjacency to transmission. So it's very close to those central North Island lines. And as we know, it's previously been consented, so that we know that touch wood, there is nothing material that may stop that happening. So very excited about that.
What about solar? And while we're talking solar, is solar really economic yet, or is it just coming into its own?
Well,
go back 5 years, nobody would have built solar. You go solar today, though, seems to be becoming very credible.
Yeah. I mean, certainly over the last couple of years, there's almost been a land grab around the country, certainly in those sunny parts of the country, in terms of getting flat land, kind of slightly north-facing, again, close to transmission lines. If it ticks those three boxes, then that likely would have sold at a reasonable premium to normal land value in terms of the ability to develop that into a solar farm. So there's been a lot of people out there seeking to get options, but so far not many of those have got out of the ground. In fact, I could be wrong, so apologies if I am, but I'm only aware of one grid scale solar farm that is currently being constructed just now. But that's Lodestone. Yep, that Lodestone. But look, I believe that if you look at the cost curves for, so I'll get on to Erwin in a minute. Sorry, but if you look at the cost curves for solar technology and batteries and what have you, they are coming down at a rapid rate. To be honest, faster than the cost curves for wind. So I think what we will find over the next year to 3 years is that you'll find more solar farms getting to FID, financial investment decision, because there are no doubt that they're viable technology, no doubt whatsoever. In terms of us, we've got a number of opportunities that we've announced to the market up north, up in Northland. So we're working through some of those at present. They're relatively early stages, but we're quite excited about one, albeit very small, right? It's very small. It's only about somewhere, depends how you look at it, somewhere between 20 and 30 megawatts. But it's a solar farm, but it's immediately adjacent to, so we've acquired the land. It's immediately adjacent to a power scheme, a hydropower scheme that we've got in Blenheim. So instantly you get a lot of the complexities of connecting into the grid are taken away because we've already got a lot of that infrastructure around there. So we're very hopeful about getting that one, again, albeit very small, but getting that one through resource consent probably quicker than some of the other ones at this stage.
So just thinking about your shareholding and the shareholders in the register. So about 76% of the register is tied up with Tauranga Electricity Community Trust
and Infratil.
And Infratil at 51%.
That's right.
What I mean, I'm not asking you to speak on behalf of Infratil, but what has Infratil said or told you about what their commitments are? I mean, presumably, as one of New Zealand's most successful infrastructure developers, they sit there with a weather eye on everything you're considering doing, as something that they would be prepared, presumably, to tip some capital into if they chose to do so.
Manawa are now the only development platform that they have in New Zealand. So certainly in the conversations I have had with Infratil, they remain incredibly supportive, certainly of our strategic aspirations to build new renewable generation. At the end of the day, it is up to us, though. We're an independent, publicly listed organisation. It is up to us to ensure that we get the best investment opportunities and then look for how we will fund that going forward. And if that's something that Infratil are interested in and it meets investment criteria that they have, then I've got no reason to believe that it wouldn't be a good conversation that we'd have with them.
Well, thanks for tuning in, everyone, and don't forget to give us a rating. A big thanks to David for joining us. We really appreciate your time and insights.
Kia ora, I appreciate it. Thank you, Patrick.
Now, we also have a special offer for Sharesies investors from BusinessDesk. If you use the promo code SharedLunch2023, all one word, you'll get $100 off an annual subscription to BusinessDesk. The offer only applies to new BusinessDesk subscribers, can only be used once per subscriber, and can't be used with any other discounts.